Electronics manufacturing services provider VS Industry has filed an oppression lawsuit against NEP Holdings Malaysia and 3 of its directors, alleging the directors had conducted or exercised their powers as directors of NEP in a manner that was oppressive or unfairly prejudicial to VS Industry or its interests as a member of NEP. The directors named are Lim Chang Huat, Lim Chi Kon, and Chow Chun Poi alias Chow Chan Leong. In a boss filing, VS Industry explained that in view of the lack of visibility as to the financial position of NEP, the company is seeking an order for NEP to be wound up and 2 private liquidators to step in and investigate the affairs of NEP. The 2 liquidators are Dr. Ui Woon Chi and Wong Chin Yong of DC Restructuring Solutions. According to VS Industry, the originating summons was filed in the Kuala Lumpur High Court on July 25th. To recap, in July 2016, VS Industry entered into a subscription agreement with NEP and Chang Huat to subscribe for up to 20% of new ordinary shares in NEP for a total cash consideration of up to 60 million ringgit. VS Industry claimed that NEP had not held any board directors meetings for more than 2 years since May 2021, despite numerous requests and attempts. NEP also did not hold its annual general meeting for both FY 2021 and FY 2022. In addition, VS Industry points out that NEP's audited financial statements for FY 2021 and FY 2022 were not available and circulated to its shareholders, nor were they tabled at its AGM. VS Industry added that NEP has not declared any dividend or made any payment to its shareholders for FY 2020, even though it made a net profit of 19.87 million for that financial year, despite the fact that its dividend policy is to pay 50% of its profits. VS Industry says that this lawsuit is not expected to have any material financial and operational impact to the company, adding that the group's carrying amount of investment in NEP stood at 7 million ringgit. Alliance Bank Malaysia expects net interest margin compression in FY 2024 as competition for deposits remains stiff. The bank recorded NIM of 2.64% for FY 2023 from 2.53% in FY 2022 against a backdrop of 4 consecutive hikes of 100 BPS to the overnight policy rate last year. Bank Negara paused the hikes in January and March before implementing another 25 BPS in May this year, pushing the key policy rate to 3%. Group CEO Kelly Kam thinks that the bank will be able to get NIM for the full year to around 2.5 to 2.55%. Kam also expects the bank's gross impaired loans ratio to rise to 3% in FY 2024 as a higher interest rate environment continues to weigh on debt borrowers as borrowing costs increase. However, he is quick to point out that Alliance is well covered as over 70% of its book is collateralized and its loan loss coverage ratio is still about 123%. While Kam admits that it expects further pressures throughout the year, he doesn't expect GIL to be over the 3% mark. Alliance is looking at stronger loan growth of between 8 and 10% in FY 2024 from 6.2% in FY 2023, driven by its core segments, namely the SMEs and commercial businesses. Kam said the bank believes those segments will continue to perform at double-digit growth, with SMEs at 12% and commercial businesses at 13%. Daythree Digital share price opened at 65 cents on Wednesday on its debut on the ACE market, which presents a premium of 117% over its listing price of 30 cents. It was among Bursa Malaysia's most actively traded, with over 141.7 million shares changing hands. Daythree's counter managed to hit an intraday high of 73 cents, but was unable to hold on to its sky-high gains and eventually ended Wednesday at 62.5 cents. This is still 108% higher than its initial public offering price. Managing Director Raymond Davadas says Daythree's IPO will be a platform to attract both regional brands and foreign talents, as well as broaden its regional footprint. He explains that the recent brands that the group has on board are looking at regional brands, so as such Daythree are beginning to hire more foreign knowledge workers and people with language capabilities such as Japanese and Korean. From the 33.12 million raised from the listing, nearly half was allocated for working capital to recruit an additional 300 380 customer experience executives, as well as 3.02 million to recruit industry experts. Meanwhile, the group said it has secured 4 clients in the last 12 months from the e-commerce, retail, banking and financial services, as well as an online travel agency, which contributed to its revenue for the first half of 2023. IGB Commercial REIT, the country's largest standalone office REIT by net lettable area, reported a marginal 3% increase in its net property income for its second quarter to 31.1 million as it recorded higher revenue on higher occupancy rate. The occupancy rate of the REIT's portfolio of 10 assets, which include the Gardens North and South Towers, Menara IGB, G Tower and Menara Tan and Tan, rose to 78.9% from 71.4% in the corresponding quarter in 2022. The group declared a lower distribution per unit of 1.74 sen for the January 1st to January 30th period, down from the 1.93 sen it paid in the previous year's corresponding period. For the first 6 months of FY 2023, the REIT reported a net property income of 63.5 million, up 5% from the 60.51 million it reported in the same period a year ago, as revenue grew to 105.32 million from the 95.51 million it posted the year before. Going forward, rental reversions are anticipated to remain relatively flat, and rental aid for entitled tenants is expected to be low. It also expects the recent announcement of reduced electricity surcharge rate for non-domestic users with medium and high voltage, which kicked in July 1st, to have a positive impact on its business. According to the REIT, this will help to eliminate significant overhead costs for all buildings, while the savings generated from the reduction can be allocated to other areas or invested in energy-efficient solutions. Pharmaniaga's unit, Pharmaniaga Life Science, has signed a Memorandum of Understanding with CSPC Pharmaceutical Group subsidiary CSPC Uyi Pharmaceutical Co. to enhance the production of CSPC's biopharmaceutical portfolio. In a statement, Pharmaniaga said that the partnership agreement is premised on the research, development, manufacturing and commercialization of innovative pharmaceutical and biopharmaceutical products, as well as focusing on CSPC's advanced mRNA vaccines, leading towards the commercialization of these products in Malaysia and other relevant territories. Pharmaniaga's R&D team views CSPC's mRNA technology platform as having significant potential, especially in the development of vaccines for diseases like flu, respiratory syncytial virus, zoster, HPV and dengue. MIDA CEO Datuk Wira Arham Abdul Rahman said that this collaboration holds the promise of propelling Malaysia towards becoming a vaccine-producing country within the ASEAN region. Pharmaniaga said that its collaborative interests with CSPC go beyond vaccines, venturing into various pharmaceutical products within the realm of anti-infective, cardiovascular, neurology, gastroenterology, immunology and pulmonary treatments.